But Dhananjay Sinha is here with us. Dhananjay, you are making a case for 17,500 on the Nifty going forward in next couple of months. Talk to us about what would be the drivers for that kind of a move. How do you assess the earnings quality of Nifty components?
So thank you for having me. So the way we are basically looking at is that if you look at the consensus projections for Nifty, it's been on average of about 28% for the next 2 years. We think that it's somewhat optimistic, and of course we have a favorable base year for this year. But on average, we are looking at a downgrade as far as earnings are concerned, largely because the stimulus factor would start fading out in the second half of next year, and also that you might actually have some margin pressure. So I think the fair assessment on a realistic basis would be something like 18% growth. And that is one thing. The other thing is that from a multiple standpoint, we think that the multiples might actually be somewhat similar or somewhat lower, a little lower than what we are today. If you look at the trailing multiple, we would be about 28 times something. I think we are assuming a 26 times multiple, and that gives us a 1 year sort of target of about 17,500 for the Nifty. So that's where it comes from. As far as sectors are concerned, what we are basically saying is that it will be largely driven by the urban sectors. So we think that the urban sectors might actually do better going forward, and we are also expecting that in so if you look at the specific segments where we are sort of underweight are things such as metals and commodities. So deep cyclicals is something we are underweight. So we think that the rally in the metal space has been fairly dramatic over the last 12 months, largely led by global metal prices, where we think that it has actually reached a peak level. From here on, we think it will actually be sideways, or maybe there will be correction because we are tracking a lot of global factors. So I think metal is something that we are underweight. We are still we are still seeing the crude prices hardening more. So we are at 75. So if you go towards 80 or 85, I think that's quite a possibility. So that part of commodities can continue to be on the higher side. But from a base metal side, we are sort of seeing that actually peaking out. And in the history we have seen over the last 10-15 years that metals have actually started flattening and softening ahead of crude. We saw that in 2012 to 14 as well. So we see a lot of those similarities here. So metal is something that we are sort of underweight. We think that as far as the financials are concerned, financials can do well, especially with large banks,
right.
because they have a large amount of capital buffer, and they have, as of now, they have seen less of credit cost, and hence, for the next 1 or 2 years, they should actually leverage and expand their business. So that's another area where we are sort of positive on. On autos, we think that a lot of stress with respect to margins and volume growth, etc., is something that we have already seen. I think market has already priced that in. And if our call on a correction in commodity prices in the next 6 to 12 months time pans out, I think autos can be a good place to be in, where we think there is valuation. So auto is something that we're looking at. Auto ancillary can actually
All right,
do
Dhananjay,
very
I'm sorry,
well.
I'll have to interrupt you out there. We're completely out of time. We'll try and get you on a better line perhaps next time for a longer chat. With that, it's a wrap on the show. Thanks very much for watching. Goodbye.